Hello, good evening, good morning, good afternoon, from wherever you're watching this video to. I welcome you to my channel, Accounting Made Easy. My name is Chidobe Ngozika. I give tutorials on accounting in a very simplified manner. So if you're interested in learning things relating to accounting, this is the place to be. And if you know someone that needs help with respect to understanding accounting, please kindly refer my channel to the person who's going to be of great help. Now let's jump right into it. Today I'll be talking about sales cycle. Now, sales cycle in accounting, these are the processes involved in making a sale. What are the accounting records involved? What documentation are involved when a sale has been made? That is what sales cycle is about. So when your client, your customer have agreed to make a sale, the first thing that customer will require to do is to place an order, and that is called sales order. So that's the first step. A sales order will be placed, ordering the product you want to buy, describing it, the quantity, just giving us full details of the products you want to buy. That's the first thing. The next thing and the next document required in the sales process is the dispatch note, which is known as good dispatch note. Now, this note is a note that informs the customer that yes, you received your sales order and your goods will be dispatched on, say, XYZ date. Alright? So it's just a note stating that yes, your good is being dispatched. That's the next process in our sales cycle. The next process is your delivery notes. That's the next document. So after your good has been dispatched, it will be delivered to you. Upon delivery, a delivery note will be issued. And that delivery note is stating the description of the goods you ordered. You, the customer, will look at the delivery note and see, okay, yes, what was ordered, what was brought to you, is it the same thing with what you ordered? So you look at the two things together. You look at what is stated in the document as what is being delivered to you, and you look at the good that is brought to you. If it matches, if it doesn't match, you also let the person that brought the item know. So that is your delivery note. Now the next thing that will be required is your sales invoice. So having delivered the goods to you, a sales invoice will be issued to you. That sales invoice will tell you how much the goods is worth. And then you as the buyer, you can now make payment. If you're not able to make full payment, maybe you can make part payment. But the long and short is that the invoice is to let you know you bought XYZ products. This is the amount. So that invoice will contain the amount you paid and the balance. Are we together? So if you know you're having value for what you're listening, please click on the notification bell and kindly subscribe. Just give me a like so that I know that I'm adding value to you. Alright. So after you have received your sales invoice, the next thing will be for you is to make payment. Now sometimes payments can be done immediately, and for some customers, particularly customers that are existing customers, they might not have the cash, so they could buy the goods on credit. So if you're paying cash, we'll say okay, yes, you received say 10,000 naira. If for instance the products you bought, let's say you bought a pair of watch, you bought a pair of shoes, and that should cost 10,000 naira. So if you're paying cash, we will now record in our cash book, yes, we received 10,000 naira from Mr. XYZ as a result of sales of a pair of shoes. Now if you are not able to pay cash and you want to buy on credit, that means you must have informed the management earlier, or the company must have known you, the customer, as a very trustworthy customer, before they can give you their products on credit. So in the case where the product is being sold to you on credit, this sale is going to be recorded in our sales day book. So the sales cycle has ended so far, and now we're not talking about recording the sales. It ended with your delivery note. So upon delivery, the sale has been completed because you now collect your sales invoice. So when sale is being made, like I said earlier on, it could be payment could be by cash, or it could be sale on credit. So if it's on credit, you're going to open your sales day book, and sales day book is where you record all sales that are being made on credit. Now, after you've recorded the transaction in your sales day book, the next book that this transaction will be recorded into is your receivable and your sales accounts. Receivable account is the account that has the total amount of goods that are bought on credit for a particular period. So if, say, on the 1st of March, Mr. Tunji bought a pair of shoes 10,000 naira. On the 2nd of March, Bimpe bought a pair of shoes 2,000 naira. On the 3rd of March, Emifunaya bought a pair of shoes 5,000 naira. If we add 5 plus 10 plus 2, that will give us 17. So we have total sales credit amount is 17,000 naira. So this credit amount will be recorded in your receivable control ledger accounts. Are we together? Because there has to be a record to help us track, okay, how much are we expecting from our customers? How many people did you sell goods on credit? Is this receivable account that will let us know? And after receivable account, there should also be individual receivable accounts whereby you record for each person. So, like for instance, Tunji, Ifunaya, and the third person bought goods 10,000 naira, 5 and 2. There should be individual receivable accounts, but you just write the customer's name. So I can say Ifunaya, that's customer 1, 5,000 naira. Customer 2, Ada. Customer 3, Tunji. Are we together? So if you sum all up, it will give you the same 17,000 naira. But the good thing with this is that you have record of the individuals who bought the goods from you on credit. So these are the 3 books that are involved in the normal sales process, particularly when goods are bought on credit. You have your sales day book where you record the sales that are bought on credit, okay, on a daily basis, and then you now have your receivable ledger accounts and your individual customer accounts where you record the receivables from each customer. So these are the 3 books that you would require. You would also require your sales account, because the sales are recorded in your sales day book. You will transfer it to your sales account, so you know how much sales you actually made. While the receivable account will now have details of how much. That is the second leg, because every transaction has 2 legs. So the debit entry will be the receivable account. That will say the amount of money, in this case 17,000 naira, is what you expect from your customers. Then the sales account is recording the actual sales. So okay, this is sales that was made. This 17,000 naira is as a result of sales. You know exactly what prompted it. And then you have your individual account. So these are the 3 accounts that are required in your sales cycle. These are the accounts that are required when you have sales that are made on credit. But if the sales was done and payment was made immediately via cash, you just have your cash book where you record the sales that was made, and then your sales day book. Okay, hope we've learned something. We've learned a thing or two. Thank you so much for taking our time to listen to my video. I wish you all a very beautiful and a blessed day. Don't forget to share this video, subscribe to my channel if you've not, and if you've learned something, please share so that others can also benefit from what you're learning. Wish you all a very beautiful and a blessed day. Thank you so much. God bless you. Bye.